we're big believers that you can build really big companies in emerging markets and emerging venture ecosystems, but it takes a long time. Founders who are raised in more chaotic or turbulent environments actually end up having more resilience later in their career. I think if we're serious about liquidity for venture over the next decade, we need to develop more liquidity from regional markets in Latin America, in Southeast Asia, in the Middle East. And that's both IPO, public market, and M&A.
Hi, folks, and welcome back to On Call with Insignia. We go on call with leaders innovating the future of Southeast Asia and other emerging markets, internet and digital economy. I'm your host, Paulo Alpino, and we're back with season 7, Against All Odds, where we've been expanding our scope of guests and leaders on the show, really get more stories of entrepreneurial resilience across the world, not just in Southeast Asia, for you guys to be inspired and learn from. And for this episode, we have the managing partner of Endeavor Catalyst, Alan Taylor, on the show with us. Really a privilege to have somebody who's had, just before this call, he was telling me like 20 years of experience in emerging markets. 10 years of that has been going into Southeast Asia, going back and forth and really learning about the different markets in this region. So really excited to just bounce off ideas and have this discussion about the future of Southeast Asia, what he's learned from the many entrepreneurs that he's worked with and backed over the years, and what he's excited about after 20 years. I guess oftentimes the question is, what else is there? What's new? What's coming up? Yeah, excited to have this discussion. And Alan, thanks for coming on all of this.
Of course, yeah. Thanks for having me. Pleasure to do this.
Incidentally, and Endeavor has a lot of intersections. We have a couple of co-investments in the Philippines and Indonesia, a couple of things like Awan Tunay, Phonik, if I'm not mistaken, as well. So a lot of our growth stage companies that are after Series B and still continuing to create impact for the communities they serve. Alan was a founding partner as well for Alter Global, which is a fund based in the Americas that has also co-invested with us in a company like Shipper. So quite interesting that there's a lot of intersections over the years. I was curious, Alan, maybe we can start off with how you know Insignia and how you know England. I know both of you are Kaufman Fellows, albeit different batches, but I know it's a pretty tight-knit group.
No, of course. Let's jump in there. And Paulo, it's great to do this. As we were chatting before, I'm American. I live here in California, but I've been working on emerging markets for just about 20 years now. And I first met Yinglan actually when Endeavor was just starting to come to Southeast Asia. And that was, first market was Indonesia. We were coming to explore. This is like 2012, 2013. And it was actually around the same time that both Yinglan and I were in the Kaufman Fellows program. So Kaufman has a class every year, and he's literally one class ahead of me. And so that was when we first connected. I can't quite remember if it was here in California or in Singapore, but it was through Kaufman back in the days where he was still working at Sequoia and running around like crazy doing all this stuff. This is before Insignia existed. So I guess I knew Yinglan first. And so then I've been around since the beginning.
Yeah, I think it's quite interesting. I guess in England, he's been in the ecosystem long enough to have seen a lot of investors come in from the rest of the world and build their interest and eventually commitment to the region. And it's great that you in particular have been in the region for this long time. I'm sure you've seen kind of the ups and downs of the Southeast Asia. Maybe you can share a little bit about that, what you've seen in Southeast Asia in particular over the last 10 years, and what your experience has been as somebody from the outside coming in.
Yeah, look, I think we have a pretty interesting global lens on this with Endeavor. Maybe for your readers or your kind of listeners benefit, Endeavor today works in 45 countries all around the world. We're very deep footprint in Latin America, where we've been literally for 25 years. We work across the Middle East. We work in Africa, of course, in Southeast Asia, and then a little bit of work in Europe and the United States, but really more in the underserved parts of those economies. But it gives us a view on how these things evolve over 10, 20, 30 years, right? And I like that you asked the last 10 years, because you do have to think in decades to really track how all this goes. And Endeavor's own experiences, we started in 1997. In that first cohort of companies we selected to mentor and coach and support way back when, one of them was Marcos Galperin, Hernan Caza, who I know has been on the show, and Nico Sakazi, the guys who started Mercado Libre, which grew up to be the first $1 billion kind of US IPO out of LATAM, the first $10 billion company. And today, Mercado Libre is a $100 billion company. And so we're big believers that you can build really big companies in emerging markets and emerging venture ecosystems, but it takes a long time. And so I think similar trajectory for Southeast Asia. When we first started working in Indonesia in 2012, 13, there wasn't that much going on yet, but we were taking a 10-year view of what this could be. And I think today we've had one wave of early success stories, right? If you do Grab and GoTo and Gojek, Tokopedia, Bukalapak, some of these things that built pretty big companies, and we'll call it wave one of tech and venture. And now I think we're very much into the second generation of some really amazing founders like Phil and the guys at Shipper, like building kind of these next gen, very big businesses. And it'll be 10 more years before we see the third generation of this, right? And this will continue to grow and compound over time.
I think one of the drivers for this kind of like multi-generational kind of evolution of the ecosystem, as you mentioned, is this idea, is this concept of from Endeavor that's called the multiplier effect, or essentially the network effect of having founders who succeed and pay forward. As much as you guys invest through Endeavor Catalyst and all that, the foundation is really this community and network that you built through Endeavor. So maybe you could share as an investor, maybe elucidate a little bit on that whole concept from your view, and then how that structure pays back into the fund and into this whole mechanism of investing in founders and driving returns for the fund as well.
Yeah, no, I mean, I'll unpack that. There's a couple of really good questions in there. Maybe the first key concept to introduce is this idea of the multiplier effect, which is something more and more we see as being a fundamental driver of change for ecosystems. And so what we mean by that is step one is to try to help entrepreneurs build a very big company, right? Like that's Endeavor's core work. As you mentioned, we're much more than a fund. We're a community, we're a network. We're doing all these things to help support founders. Obviously with Endeavor Catalyst, we have a fund, right? We invest in our own Endeavor companies, but so much of the work is around helping companies scale and build big, successful businesses, right? And that is, they'll create jobs, they'll create wealth and economic opportunity, and frankly, they'll create role models and sort of success stories where the next generation can say, hey, if she can do it, maybe I can do it too. But step two in this whole process that we've realized is actually just as important is then helping those successful founders have a platform for giving back and for paying it forward and for really helping the next generation, right? And so it's not sufficient to just big company, have an exit, sell the company, make a bunch of money and move to the beach and buy a boat. That's not the game. The game is, okay, if you've been really successful, now what we want to help you do is train, mentor, coach, invest in the next generation of entrepreneurs. And if you think about it, that's actually what happens in Silicon Valley, right? The reason Silicon Valley is so successful is that one generation really helps the next generation. And so Endeavor's really started to embrace that, to lean into that. And we're studying it, we're mapping it, we're actually documenting it, we're creating these kind of bubble maps to show to people what this really looks like. And frankly, we're encouraging our own founders to do this, to encourage their employees to go off and start new companies, to coach, to mentor, to be angel investors, even in some cases, you know, Hernan from Mercado Libre, to go on and start their own venture capital fund and become VCs.
Yeah, no, I think the other word for that I often hear is the creation of mafia, so to speak. But I guess the multiplier effect is more kosher that way.
Well, look, I'll tell you a funny story. We used to say mafia because Reid Hoffman from the co-founder of LinkedIn is on Endeavor's board. And he's part of the famous PayPal mafia that people talk about so much. But Reid doesn't like the term mafia. He's no, don't call it mafia. Like it's a network, it's a community, it's a multiplier effect. But we still actually used mafia for a long time. And then we opened Endeavor in Italy. And we realized we really couldn't be using this word in this way, right? And so we stopped using mafia.
Oh, that's a funny story. But yeah, we've talked about the evolution of Endeavor in decades, and moving into this next decade. What are some of the things that perhaps there's a lot going on? There's a lot of headlines around tech, especially with, at least in Southeast Asia, there's a lot of reckoning around what it takes to build a $1 billion business. Do you go for something that's profitable and hopefully that attracts more following investors? Do you continue with this theory of venture scale? How do you incorporate corporate governance? I think there's a lot of talk around that in this ecosystem at the moment. And then there's also the kind of impending shadow of the macro environment, especially with, I think England these days have been talking about how there's this decoupling of Wall Street and Main Street, where stocks are at an all-time high, but at the same time you have inflation and wages as well, and jobs aren't performing as well relative to the stock market. Yeah, with all this, I know it's a lot to I just dumped a lot of things there.
That's a
But
big question you're ramping up to there.
yeah. Given all these things, what perhaps to offer some optimism and some excitement to our audience, like what are the things that perhaps aren't being as talked about that actually shine light at the end of the tunnel, so to speak, or some things that our listeners can be excited about when it comes to emerging markets and even Southeast Asia from what we've seen?
Yeah, maybe I'll offer one or two frameworks for people to apply or use. And we talked about this concept of thinking in decades, but there's a good quote for it that gets attributed oftentimes to Bill Gates. I think some other smart people have said it as well, but it's this idea that most human beings overestimate what they can do in 1 year, but underestimate what they can do in 10 years. And I think if you apply that even to your own life and to building startups and to working in companies, like playing a longer term game is actually a very real competitive advantage. And it feeds into this idea that most overnight success stories, we'll put that in quotes, overnight success in the headlines of TechCrunch, like this company gets acquired or this IPO, they're 10 or 15 years in the making, right? And so in these times where kind of waters get choppy, what the best founders do and what the best teams do building companies is they just keep going, right? And they just keep their head down and keep working and keep pursuing the mission and keep focusing on really building something that matters. Maybe one of the takeaways of 2021 and 2022 and all the craziness that happened in venture is that there are no shortcuts, right? Building a big, important company takes a long time. It takes a lot of great people and a lot of hard work, and usually some very high quality, good investors as well. And we can accelerate things and you can try to go faster, but there's no shortcut, right? And you really do have to do this for the very long term. One other framework I would share is I do think the world is undeniably getting more global and more interconnected. And I think our headlines are sometimes dominated by some of these politics type things around certain governments or certain states wanting to pull back or wanting to look more inward or trade less. Or we certainly have plenty of headlines like this in the United States right now.
Deglobalization.
Yeah, deglobalization. But I don't think that entrepreneurs got the memo, right? So my honest view is that entrepreneurs are more global than ever, right? In terms of working together, going to market, expanding all over the world. And I think we're just entering an era where venture capital also is becoming more and more global. I think we're going to keep seeing that over the next decade.
Yeah, I think even for Kaufman Fellows, I think, was it 40% or 40% of fellows are actually just everywhere in the world. And so I think that's testament to that.
It's almost half, right? Kaufman
Almost half,
started
right.
30 years ago as a very
Yeah.
Silicon Valley centric organization. Today, almost half the fellows are elsewhere.
Mhm.
And Kaufman recently did this study. Actually, it was very fun for Yinglan and for myself. Kaufman did something called the Fund Returner Index.
Yeah.
And they looked at, hey, who are of the people who've done the Kaufman Fellows program, who's having the most success in investing in billion-dollar companies and creating billion-dollar exits? And very fortunate, lucky, Yinglan and I were both in the top 5 of this study. But you look at the top 10, 7 out of the 10 top funds are not in the US, right?
Mhm.
They're in Southeast Asia, they're in Japan, they're in Mexico. We're doing all emerging market stuff. So it really is becoming more and more global, I think.
I want to go back to this framework of a really mindset of just keep going that you mentioned earlier. And as an investor, how much of a role do you play in that whole resilience and persistence? Maybe you can speak to some examples that you've seen over your career and some of these market cycles that you've seen as well.
I think it does speak to the role of investors versus that of founders and team members. And I think what I've learned in my career doing this with Endeavor Catalyst, and remember, I didn't start out as an investor, right? I worked at Endeavor before as just a mentor, coach, support role. And we started this fund 12 years ago and we became an investor. but I've been able to see some of the world's best investors up close and see how they work with startups and how they work with founders. And I think they play a couple really key roles, right? One is certainly they can help folks think bigger and almost raise the horizon and raise their gaze up and think like how big this can really be. I think investors, the best investors, are very good at doing that. But they also can really be a presence in terms of helping entrepreneurs in the most turbulent times be comfortable with the chaos, stay calm in the storm, and see their way to the other side of whatever crazy, hard, terrible thing is happening to their industry, to their company, to their market at that given moment. Because I think if there's one takeaway, if you're playing these very long timelines of 10 or 20 years, stuff goes wrong, right? There will be huge challenges. And the best founders are certainly the ones with the most resilience to get through that. But the best investors, I think, are the ones who know the right ways in which to support founders and help them through the harder times. And those should actually be the times that the best investors are leaning in to help, not fanning the flames of freaking out and making the
Right,
founder's
right.
life more difficult.
Yeah, no, I think a lot of the more optimistic investors that I've talked to are the ones who actually started out as mentors, coaches, or even founders themselves. They do come from that root of simply supporting other founders, getting them through their problems or their issues, as opposed to, say, somebody who came from, I guess, the more financial side of things. But yeah, do you have any examples of those kind of like war stories, like companies turning around from
I
those
mean,
pitfalls?
lots and lots. You
Like
do
what's
have
the
markets.
what's one that you would say if a founder were to ask you, oh, I need some inspiration and this
Here,
define like yeah.
let's leave Southeast Asia for a minute, but stay in emerging
Mhm.
markets. Let me give you a couple examples from Turkey. Turkey's a market Endeavor entered in 2007. Great entrepreneurs, right? Great entrepreneurial talent. But over the last 15 years, almost everything that could go wrong for a market or for a startup ecosystem has gone in the wrong direction, right? For Turkey, right? They've had huge currency devaluations. They had major political drama. They had an attempted coup. They've had a lot of difficulties with all kinds of things in terms of government stability. They had a massive earthquake. I remember talking to the woman who runs Endeavor Turkey about this idea. And so, what would you highlight as the biggest challenge that's happened in the last 10 years? She's like, give me a list. Anything that could have gone wrong did go wrong, right? And yet, in that same time period, you had several really big, important companies get built, right? Yemek Sepeti was a food delivery business that Endeavor supported from early on. That eventually we got General Atlantic to invest in the company, and the company was acquired for almost $700 million in 2015. But probably the story I'd focus on, where I'm very close to the founder, is called Peak Games. And Peak is a gaming company where all the talent building all the games is in Istanbul, in Turkey. And this is one of those long journeys, right? Peak, Sidar, the CEO, was selected into Endeavor, I think all the way back in like 2009, 2010. We made an investment in the company in 2013. And there were multiple times over the years when there was the coup attempt, or was the major currency collapse, when there was the earthquake, that people said, man, you got to get out of Turkey. Like, you got to sell your shares in these companies and get out. And frankly, some investors did. And they sold their shares in different companies for like pennies on the dollar and got out of the market. And it turns out if you just stick with it, which Sidar did because he's just an unbelievably resilient, the level of perseverance in him is incredible. Yeah, he was never going to give up. He was just going to keep building and building. And eventually, you fast forward, this is that same idea, overnight success in 10 years. Peak Games got acquired by Zynga for $1.8 billion, right? It's the single best cash on cash exit in our whole portfolio globally. And it came out of Turkey, right? In fact, we have 6 investments from our first few funds in Turkey in this time frame of kind of 2012, 13, 14, 15. And in total, we've had 5 exits out of the 6. And we have an 11x cash on cash return for your venture folks,
Wow.
DPI, right? Like actual
Yeah, DPI. Yeah,
realizations
yeah, yeah, yeah.
from investing in Turkey. And that's not
Mm.
an obvious thing because If you just read the headlines of the newspaper, it has not been an easy place to build companies or build startups.
Right. Yeah, I guess looking at it on the outside, like would not have computed to actually stay on and keep the money there, but eventually, like time will tell, and it paid off in a big way with Peak Games. So quite an interesting story. We'd love to hear more from the founder at some point. I think like operating in a market like that feels you can anything else is possible after that.
I think that the takeaway that Endeavor has learned from this is that we believe in emerging markets. We believe talent is globally distributed, right? There's amazing founders everywhere. But we've actually come to believe that we are particularly well suited to go into markets that have this kind of chaos going on, right? And in the last couple of years, we've launched several new countries for Endeavor. We're in 45 countries now. But among them, we launched Endeavor in Pakistan about a year and a half ago. And then this year, we actually launched in Ukraine. And, again, people said, are you guys crazy? Like, there's a war going on. But our view is like, there's amazing founders there. The war won't be going on forever. And the founders need help, right? And it's something that I think Endeavor is uniquely positioned to help do.
Looking forward to stories out of those markets. I'm sure those will be even more really extraordinary stories. And I hear a lot of great things about Pakistan recently. We've had a lot of founders from Pakistan interested in raising from Southeast Asia investors as well.
Hmm. Well,
So
look,
there's
there's
that.
there's
Yeah.
very little venture capital in that country right now, especially if we do relative to market size, right? It's
Mhm.
220 million people. There's a handful of local funds that I think actually will do quite well in the long term because the market is still very
Simply
nascent.
buying investing this early.
Mhm.
Right, right. And speaking to resilience, a little bit more of an indulgent question, but something that I've been thinking about is whether or not resilience is possible to measure, especially in the context of entrepreneurial endeavors. For you, what are the most like consequential factors, maybe the top three, that contribute, would you say, to this kind of resilience? It could be something to do with the business, could be something that you've seen as like more individual characteristic, or even something more cultural or societal that you've seen that you think has really helped a lot of, say, these founders in Turkey, or you think potentially the founders that you meet in Ukraine that would really build the resilience and to just keep going.
So look, I have a view on this, and maybe since you asked it the way you did as more of a personal interest, I'll share my personal theory. This isn't a
The
documented in any
tinfoil hat
white
thing,
papers, a
you
little bit
know.
of tinfoil hat. But part of it is that I actually really think it's about the people. I think it's very much about the humans. It doesn't really matter what industry it is or what country it is. Like, I think it's the qualities and characteristics and the almost like social psychological profile of the founders or the people themselves. And my observation is that founders who are raised in more chaotic or turbulent environments actually end up having more resilience later in their career, right? And Latin America is a good case study for this. The big markets in Latin America are Brazil and Mexico, but most of the really big companies have been built by founders from Argentina, Colombia, and Venezuela. And what those countries have in common is they are less stable, more chaotic, more turbulent. Mercado Libre, the guys are from Argentina. You'll hear about Rappi, which is the very big up and coming company. The guys are originally from Colombia. The single biggest scale up company in Mexico is called Kavak. It's a used car marketplace like Carro or Carsum. And it's huge in Mexico. The guys who built it are from Venezuela. And I think there's actually something to that. And if I had to try to break it down, there's some amount of just pure self-confidence. Like, I think Koppenfeld calls it radical self-belief, right? Like, you really have to believe in yourself on a crazy level. And then you have to be determined. I don't know if we're using resilience, determination, but something about just like never give up, overcome all obstacles. It's a real thing that we see in startup founders.
Yeah, no, I think yeah, radical self-belief. That's an interesting way to put it. And I think a lot of sort of that stubbornness is quite a thread to pull in some cases, right? Because it can go either way. But yeah,
One thing we actually look for with Endeavor, right? Because Endeavor is a lot about kind of analyzing founders and companies. Maybe the one thing I've done, if you think about Malcolm Gladwell's 10,000 hours of something, I've now spent way more than 10,000 hours talking to founders. And so I think what we look for is you end up seeing a combination of this radical self-belief, but tempered by or almost mixed with a deep and real intellectual curiosity, right? Where they actually do care about learning and answers to things and figuring out how things work. Because what happens is if you have intellectual curiosity, you don't become a jerk or an asshole or think you know all the answers. Someday that actually manifests as humility. Very often it doesn't earlier on, right? Most really confident 25-year-olds are not particularly humble. But if they have intellectual curiosity, we know that they'll be able to keep learning as they get older.
I recently read this book, The Bonfire Method, I think, something like that, written by some
Okay.
guys from Google, and they basically did this study of like how founders view their ability to build companies over time, and you end up with this kind of like Dunning-Kruger like curve of initially starting out with a lot of confidence, and then eventually realizing that this is actually real, or this is actually a lot harder than I initially expected, but that's sort of tempered by that curiosity you mentioned and kind of humility. If you just keep going and keep building and overcoming that dip of like self doubt almost, or reckoning with reality that allows entrepreneurs to go for the long term.
I think in general, the best founders succeed because they're obsessed with trying to solve the problem they're trying to solve. And that can happen to a 19 or 20-year-old kid, but it more likely happens to an industry sort of veteran who's been working for a decade or two on something and realizes, okay, there's a real problem here we need to solve. And usually there's a group of them, right? They get together and say, this thing that's been driving us all crazy for 10 years, we're going to fix this. And that is typically why you see more enterprise, like more B2B founders, more deeply technical founders can certainly be not the 30 under 30 crowd, but I think Forbes even has it now. Don't they have a 50 over
40
50,
also, yeah,
40 over
over
40 or
40,
something
something
like,
like that. Yeah.
but yeah, I think it has to do with that idea of just being obsessed with solving the problem you're
Mm.
trying to solve.
Actually, that those descriptors you just mentioned speak to one of our companies, particular Finmo. We had a bunch of guys that came from like PayPal and Rapid Asia, and just
Mm.
started. They realized there's a lot of problems around treasury management that they couldn't solve in their respective jobs, and seeing a lot of customers and partners face, and so they decided to build their own kind of like treasury for Asia. So handling a lot of like cross-border cash flow management and funds and all that. Yeah, quite interesting. And yeah, moving into continuing our conversation on entrepreneurial resilience and the role of investors, you did speak to that a little bit earlier, but maybe you can speak to how you evolved yourself as well as an investor. I think for a lot of investors, there's this conscious evolution of what your differentiation is, or like how exactly are you as an investor contributing to like founders that you help out. How have you seen yourself evolve in that, and what are some of the things that you have learned not to do anymore over time, or kind of like things to avoid, or habits to stop doing, or try to stop doing as you become a supporter for founders over the years?
I'll start by saying that I have a really unique job. I think I actually might have the best job in the world, but it's a very unique and privileged position to be in because there are 600 people working for Endeavor in 45 countries, literally sitting down and spending time with thousands and thousands of entrepreneurs every year. Roughly speaking, the top kind of 1 to 2% of those founders end up going all the way through to be selected as Endeavor entrepreneurs. And those are the guys I get to talk to. And so that's just to start with, that's an incredibly lucky kind of vantage point. And I think we've come to realize and recognize that the idea of Endeavor having its own fund is also a really special kind of a special thing, right? I mean, if I'm talking to LPs, it's a very easy way to say, yeah, we have very unique access to invest in all the best founders because we spent all this time with them to have them join Endeavor, and now we can put a little bit of money into their round. But more directly to your question, the superpower I think it's given me in working with founders is that I've been on the inside now of several thousand fundraisers, right? Where we see all these investors and we see all the founders. And this is multi-play game theory, right? Because you do this over with the same investors, and we're a co-investment fund. We've now made almost 350 investments in the rounds we've invested in. And then those companies all go on to raise two, three, four more times. And so you see this game a lot. And so I think I've come to really view my particular kind of special trait that I can do as Endeavor and with kind of people on my team is help founders navigate fundraising environments that are cyclical, that do go up and down, that don't have perfect information, right? It's hard for founders to figure out what's going on in the market. And so we try to just be super honest with founders about where things are at, what this means for their company and their fundraise. We coined this term about 15 years ago at Endeavor of trying to be a mentor capitalist. And that's what I try to do and that has meant actually in 2022 and 2023, helping a lot of people raise repriced rounds because things got out of whack in 2021. But honestly, the founders who did that with the most courage, the fastest, the boldest, the bravest, and just got reset and kept going, they've done great, right? Where the companies that have dragged their feet and not wanted to raise a down round and hesitated in all these ways, like it's not just on the founder. Sometimes it's the cap table and the board as well. But I think that's my biggest realization is that Endeavor sits in this very unique position to be an ally to the founders about the equity fundraising process. And even though we're putting in a small check ourselves, it's an automatic rules-based check that we're doing for all the Endeavor companies. And so they can have kind of full confidence in us to just be their ally. And that's been cool.
Yeah, you did mention that you do a lot of co-investments. Well, what's your take on what you talk about resilient entrepreneurs? How about like resilient investors as well? What's your take on what you've seen from various investors that you've co-invested with or worked with on boards and all that?
Look, I think it's underappreciated that being a really great venture investor is also a multi-decade game and an apprenticeship business. And it's not just raising a little bit of money and showing up with a check. And I think Coffin Fellows gave me a lot of good frameworks for how to pursue this, right? I did the program when I first started, but certainly for emerging managers and people who are building their own firms, right? It's like building a startup, right? You're really learning as you go in a lot of this. And I think reminding yourself that building a great venture fund is about a lot more than just being a good picker, right? Well, that's a good company. Let's invest in that one. And all the different parts of not only see the deal, pick the deal, win the deal, but then afterwards really partnering with founders. And I think the best investors really do view this as partnership and really do take it seriously and really do think about the human part of it. And that pays off, right? Because if you look at you can pick Sequoia or Accel or Lightspeed or Andreessen, or you can go to the next stage and look at folks like General Atlantic. A lot of times these guys are backing the same founder 2 or 3 times in different companies over a 20 or 30-year period. And you only do that if you prioritize kind of people and relationships first and really try to be good to founders as you go. Even with Endeavor, as we get older and go into our 3rd decade and kind of our 2nd decade as an investor, close to 20% of the deals we did this year will be in Endeavor entrepreneurs starting new companies, right, on their 2nd or 3rd or 4th company, right? And I think that's a really important kind of thing to think about.
Yeah. Do you also have Endeavor entrepreneurs who invest in the Catalyst Fund?
Oh, for sure. Yeah, we got tons of them. One of our own things, we want Endeavor to be of, by, and for entrepreneurs, which means someday we'd like Endeavor founders, Endeavor entrepreneurs to take over the local chapters in every country and be the board members, to be the donors, to be the mentors, but yeah, also to be the LPs, right? Our most recent fund is $290 million. It's a very much a community-based approach to LPs. So we raise money from all the board members and mentors and people involved with Endeavor. It's by invite only and inviting people in. But more than 140 of those LPs in this last fund actually are Endeavor entrepreneurs. So we have tons and tons of our own founders.
Yeah, no, I think that's really like the flywheel. The ideal flywheel for VC is ultimately to have the portfolio companies they invested in, not just start 2nd, 3rd companies, but also even potentially invest in their future funds. I think that's pretty cool. And speaking of LPs, I think in Southeast Asia and like the view on exit is not as bright as it initially was, and you have a lot of funds that are becoming more creative about how they think about exits, whether it's looking to more non-traditional kind of like buyers or expanding the buyer set to more global pool and all these things. How, I guess in your conversations on the other side of this value chain to LPs and buyers and all of that, like how do they view emerging markets and like pathways to exit from there? You talked about peak earlier, which I guess is a little bit of a older deal, right? And that was bought out by a much more global company. Yeah. What are your views on the exit environment?
Yeah. So look, still today, the biggest success stories with Endeavor Catalyst, we've had 26 exits, right? 11 IPOs and then a bunch of acquisitions. But the biggest success stories, the liquidity is actually still coming from largely the US market, meaning the biggest IPOs have been in New York, NASDAQ and New York Stock Exchange. And the most successful acquisitions, the buyers have been companies like Uber, Zing, Google, et cetera, right? Now that's starting to shift a little bit. Our single biggest exit last year was a business actually out of Tunisia in Africa, was acquired for $700 million by a firm called BioNTech, which is a German pharma company, right? Okay, now you're getting a little more cross-border buying with a European buyer. But I think if we're serious about liquidity for venture over the next decade, we need to develop more liquidity from regional markets in Latin America, in Southeast Asia, in the Middle East. And that's both IPO, public market, and M&A. And so we have to work more with the biggest groups who could be acquirers and be buyers. We will continue to have the global firms buy things, right? Like I would not be surprised to see Microsoft, Amazon, some of these guys actually get more acquisitive in some emerging markets because they understand the value of it, right? But they see where the growth is coming from, right, in their businesses, and they know it's in these other geographies. We actually talk about this pretty openly in Endeavor Catalyst portfolio. So far of the 300 or so companies, right, we've backed 60 businesses, 60 that have grown up to be billion-dollar businesses, but we've only exited 10 of those, right? So we have 50 private unicorns. And the idea is, where do these companies go for liquidity, right? Some of the biggest ones will be able to list in the US, but many of them won't, right? So should they list in London? Should they list in Abu Dhabi or Dubai or Saudi Arabia or Singapore or Hong Kong, right? It's interesting to try to see. We're investors in Bukalapak. We were very optimistic about listing Bukalapak in Indonesia. And candidly, the IPO went great, right? They raised $1 billion. It was a tremendous sort of event. It was great for the company, provided liquidity, but it has not been a great market to be listed in, right? Because there hasn't been a ton of liquidity over time. The stock doesn't trade the way it would if we were listed on a US exchange, for example. And it doesn't mean we've given up, right? It just means, okay, Indonesia Stock Exchange is not yet where we would want it to be, right? To be a true liquidity option for the best companies.
Yeah, and I guess this whole you're talking about globalization of entrepreneurs, globalization of VC, and I think there also has to be like you mentioned globalization of exit options and exit pathways, which is probably
Totally.
a much longer game to play because you have a lot of different factors that come into it.
Well, I've been thinking about it like this recently, right? We study venture going global as like VC dollars invested. Okay. And that started about 15 years ago with venture starting to go to more places. You can use kind of a midpoint measurement of unicorns, right? Or private companies getting valued at $1 billion. That really started to go global maybe 5 to 7 years ago. But liquidity, like true liquidity, exits and IPOs and things, really only has just started recently outside the US. And in some ways, it makes sense, right? Because the venture is a 10 or 15-year timeline. The dollars going into all these companies are going to come out later, right? And so it makes me cautiously optimistic that just systematically between now and 2030, we are going to see a lot more liquidity in a lot of these places.
Right. So there is that progression, that intuitive progression, so to speak, of how things are globalizing. And on that note, I think of something that you've always been speaking about, and I think the world is still definitely headed in that direction, regardless of the headlines. I want to thank you, Alan, for coming on the show with us
Of
and
course.
sharing a lot of your experiences and views on innovation venture around the world. And yeah, for those investors listening in, hopefully you guys will come out of this conversation a little bit more cautiously optimistic about your work and what you guys do. And that's something that we're trying to develop as well. Because we have this company called Instinct Ventures Academy, like a VC education program as well.
Mm-hmm.
And it's always gratifying to continue to see talent interested in putting putting money where their mouth is, putting their skin in the game, and supporting founders, backing founders, even through these kind of like uncertain times, so to speak. So yeah, I think it's great to have you continuously, I guess, preaching the gospel of emerging market, and shouting out for regions like this, for regions like Southeast Asia, Latin America, especially to the more kind of U.S. like global landscape. So yeah, on that note, thanks again, Alan, for coming on the show. Anything else you wanted to shout out or mention while we're on call?
My pleasure. Happy to be here. Glad to do it. And certainly keep doing what you guys are doing with the academy and everything else. My last observation to share is the timeline on which we try to do all this stuff doesn't match the news cycle, right? And so there's going to be headlines, there's going to be ups and downs. I think for people in Southeast Asia, there's been a handful of pretty bad negative headlines in the last 2 weeks, right? My counsel is don't freak out, right? There's growing pains to these ecosystems. You have to play the long game. You have to play for the long term. And the opportunities are there, right? The demographics are there. The economic opportunity is really there. I think to Yinglan's big talking point about Wall Street and Main Street, we have to figure out how to provide economic growth in a way that's also inclusive growth, right? That goes for the United States and for all these other economies as well. But I am a fundamental believer that tools like entrepreneurship and venture capital are actually some of the best tools we have for inclusive, meritocratic wealth creation and therefore inclusive growth in these economies. We'll just keep doing it for a couple more decades. And Paulo, you're young, so we got plenty of time here.
Yeah, and I think key words to take away: just keep going.
Yeah.
Well,
Never
yeah,
give up. Never give
there we
up.
go.
Just keep
Exactly,
going.
exactly.
Exactly.
And really to the spirit of our to the spirit of our podcast against all odds. So it's a great way to end this episode. Yeah, thank you again, Alan, and do follow us for more conversations with investors and like Alan and other entrepreneurs, not just in Southeast Asia but across emerging markets around the world. And yeah, thank you guys for joining in, and see you guys in the next episode.
All right, man. Thanks.